Vertiv Holdings, a global provider of critical digital infrastructure and continuity solutions, reported quarterly financial results on October 23rd, 2024. In this video, I'll review those financial results and what they could mean for Vertiv stock investors. I'll also update my buy recommendation of Vertiv stock. I've had this stock rated as a buy all year long. I'll let you know if I'm keeping it as a buy following these financial results or if I'm changing that recommendation. So let's take a look. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, let's start with the third quarter 2024 highlights. And the company said they reported net sales of $2.074 billion, which was 13% higher than the same quarter last year. More importantly, their operating profit increased by 48% to $372 million. This is demonstration of operating leverage where your profit goes up by more than your revenue goes up because much of your costs are fixed. And so when you get revenue increases, your costs stay relatively flat, and that creates a bigger separation between revenue and expense, which increases your profitability on the bottom line. The company also said that trailing 12-month organic orders increased by 37% compared to the same trailing 12-month period last year. Demand is being generated by hyperscalers, companies like Amazon, Microsoft, Google Cloud, etc., that are working to develop these data centers, and they're looking to Vertiv to help them with either co-location or building newer facilities. Now, the performance in the latest quarter was so good that the company is raising 2024 financial guidance across all of its important financial metrics. They also expect 2025 organic sales growth to accelerate from 14% in 2024. That means not only is the company's revenue growth going to be above 14% in the double digits, which is solid, but it's going to be accelerating. And that second derivative growth is something I've talked about in the past as a really attractive feature of an investment. Not only is it growing at a nice rate, but the rate of increase is also increasing. The company's management team went on to say that their order growth at the end of the second quarter of 2024 was driven by strength in the hyperscale and co-location data center market. Third quarter organic orders increased 17% compared to last year's third quarter. And the pipeline increased sequentially from the second to third quarter of 2024 across all its three regions, with continued strength in AI-related activity, including liquid cooling technologies. Yet another data point that anything related to artificial intelligence is still booming, right? This is now the third or fourth company I've evaluated in this earnings season that's talked about booming AI demand. The two prior companies were the giants, Taiwan Semiconductor and ASML, which also said similar things as what Vertiv is saying, that demand from anything related to artificial intelligence is really, really strong. And we get yet another data point here that continues this theme that demand for artificial intelligence is increasing. They went on to say that pipelines continue to grow, and there are clear indications of an acceleration in AI development that is truly encouraging and which is driving demand across our entire AI-enabling portfolio of power, thermal, IT systems, infrastructure solutions, and services. In other words, for this company, it's saying that if you thought our business is growing very nicely right now, you're going to be surprised at what you see over the next 12 months or the next 24 months because it's growing, it's accelerating, it's growing at an increasing rate. So not only do we feel strongly about our current quarter and our current year, but we feel very optimistic about 2025 and the future because of the strong demand for artificial intelligence. And I've been saying this repeatedly now. We've got roughly $1 trillion of infrastructure for data centers that were based on CPUs. And according to all data sources, they say that those need to be updated. They need to be updated to this latest generation technology where the data center is primarily based on GPUs or accelerated computing. So there's roughly $1 trillion of data center updates that need to work its way through the system. And that's just one segment of the AI market that's absolutely thriving and accelerating, and money is being put to work here in the tens of billions, if not hundreds of billions of dollars already, and that number is accelerating. And finally, checking with the company's cash flow from operations, you'll notice an increase of 126 million from the same quarter last year up to 375 million. So Vertiv firing on all cylinders, the company's business, growing revenue, growing profitability, growing cash flow from operations, an increasing pipeline, increasing orders, increasing interest from customers, and the company feels that this is going to be a several years long trend here, not just a one-off thing. So I highlighted already that I've had Vertiv stock rated as a buy all year long here in 2024. I last updated this buy recommendation, reiterating it as a buy on August 14th. So do I still think this stock is a buy? Well, it's now trading at a forward price to earnings ratio of 32. This is near the most expensive this stock has traded for, going back roughly a year and a half on this metric. But the company has delivered better performance, and investors are getting a lot more for what they're paying in this company. You're getting a company with accelerating revenue growth in the epicenter of one of the most innovative technology upgrades in a very long time, and a business that's profitable, generating significant cash flow from operations. And so I think it's worth the extra price that you're paying for Vertiv, given the company's excellent prospects. So if I was to update my recommendation and answer whether or not I think the stock is a buy, hold, or a sell, I would say this stock is still a buy. I think the company has a several years long runway of growth to demonstrate, and I think it makes sense for long-term investors. It offers a good risk versus reward. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.